All right, so let's talk about ETFs. Let's talk about the strategies around ETFs and also some of the biggest names that are going to be getting out there in the market. One, of course, is going to be VanEck. We'll do a breakdown video today with them. I think you guys are going to love it. My name is Paul Barron. Welcome back into TechPath. Joining me today, of course, is the head of digital assets over at research at VanEck, and that, of course, is Mathew Sigel. Great to have you on the show.
Hi, Paul.
All right, so Mathew, let's kind of get into, first of all, just in general, what VanEck has been able to do here with the, exchange, from the aspect of where this futures product is going. Do you feel like this has been a success for what you guys have launched? What was the expectations versus what is actually happening right now in the market?
Yeah, Paul. So VanEck was the first mutual fund and ETF sponsor to file for a spot Bitcoin ETF back in 2017. And it became very clear that the SEC was not willing to bless those products. So we pivoted and spent a few years making investments into venture and spinning up what ETFs can trade over in Europe, and basically releasing a whole number of products in this space while keeping an eye on the regulatory situation in the US and updating our filings as the regulatory environment changed. So a couple months ago, it became clear that SEC was willing to consider a futures version of an Ethereum ETF, much like Gary Gensler had signaled back in August 2021 regarding Bitcoin. And although it's a crowded space and lots of filers, you have to be in it to win it. So we launched this product EFUT, and recognizing that these futures-based products are probably not the most ideal for investors who are looking to track the price of spot perfectly, because it takes some additional friction to manage these products, and you have to roll the futures contracts. So I'd say our expectations for these futures-based products are somewhat limited, and as a result, we made an announcement last week that we'd be donating 10% of the profits from EFUT directly to Ethereum protocol developers, an institution called Protocol Guild, which helps distribute funds to Ethereum developers. So I think, by my math, I estimated that Ethereum futures ETFs could have somewhere between $90 to $350 million US. That's a 1-year target. We obviously haven't hit those targets quite yet, which I think points to, one, the macro environment, and we can get into that, but also just the nature of these futures-based products. The fact that there's, crypto is meant to be an asset that you can hold directly. We do think there's a role for the regulated ETF structure, which mandates qualified custodians to hold on to these securities. But with a futures-based product, there's just an extra set of intermediaries that are able to take out some value from this product.
Well, it's interesting that you think that the market would be at around 350 million. I was looking at just right now the ETF itself, total assets around 7. This is down just slightly a little bit. We've been tracking this pretty significantly around what's happening in the space. Obviously, VanEck is one of the more pro-ETH, I would say, investment groups out there. When you look at not only the future of the futures side of this, but also from the scenario of what we'll see in a spot. I mean, obviously, you guys have been building a lot of other products out there. How would that affect, I guess, your strategy going forward once that we do start to see spots hit the market with what the futures product is going to look like at that time? Where do you think that will fall?
We'd have to imagine that most clients would want to hold the spot ETF and not the futures-based ETFs. So my personal view is that these are kind of placeholder products to give investors some exposure before the spot products come to market.
Yeah. All right. So that's, I think the obvious next question is, predictions on when you look at, whether you're following what the guys over at Bloomberg are saying, or you're looking at some of the market analysts out there that are looking very strongly in and at the ETH spot opportunity here. Do you feel that will come fairly significantly close to when we might see a Bitcoin spot, or what do you think is going to be the lay of the land in terms of spots being approved?
We do expect that these spot products will come to market sometime in Q1 of next year. Don't have a firm view on like how much time might elapse between the BTC spot and the Ethereum spot products.
Yeah. Yeah, a lot of the same companies all kind of vying for that same position. I think from VanEck's position, you guys were first to market, and obviously one of the larger, entities out there when it comes to Ethereum as a whole from a futures product side of that. Do you feel like that has it's already kind of proven its case with what happened with the Bitcoin futures product. Do you feel like that's going to happen with the spots as well? First to market's probably going to yield most of the benefit?
This is a guess, but I think that the SEC has faced a fair bit of pressure on how the Bitcoin futures ETFs were rolled out and course corrected a little bit with Ethereum futures, such that all these products effectively went effective and traded on the same day. Mm-hmm. So it would be our hope and expectation that will also be the case for the Bitcoin spot products, and then it'll come down to a marketing and a reputation war. So we'll see what rabbits we can pull out of our sleeve to win the number one spot on the Bitcoin spot side as well.
I was watching some of the VanEck ads that were coming out. This coming over from your own Twitter account. I mean, I like this strategy in the sense of just making regular people, one, aware of what Ethereum is and start the education process. When you look at the scenarios that will play out of traditional investors, or maybe even some crypto investors that maybe want to go the traditional finance route, do you feel like that is going to be a big leap forward, or is there a lot of work yet to be done just on the education, the advertising front, to get people aware of really what's happening especially around the ETH ecosystem?
I do think that institutional investors are quite aware of Ethereum's value proposition. It's really the only profitable blockchain project. We estimate that the Ethereum protocol is going to generate more than $2 billion in profits for stakeholders this year. The problem from our perspective is just the macro environment. So with Ethereum's transition to proof of stake, you can now earn a yield on your Ethereum if you stake it via the smart contract. But because the T-bill yield has been rising so dramatically, that ETH staking yield has become somewhat unattractive to macro investors, and we think that's one of the reasons why these futures-based ETFs have seen limited traction. We're keen observers of what's happening on the blockchain. We do believe in self-custody and holding your own keys. It's not for everyone, and institutional investors face, higher fiduciary duties that require, qualified custodians and regulated intermediaries to help them with that. And a spot ETF product can really facilitate broader adoption. But the main point here is to transact on-chain using your own private keys. And when we observe the blockchain activity over the last few months, we're finding that it's definitely a bear market, and there is a lack of on-chain activity at the moment. And we can see that in the price of Ethereum, the Ethereum to Bitcoin ratio, which has been falling quite materially here in the last month or so, with Ethereum underperforming. So it's a tough macro environment. You have an imperfect product in these future-based ETFs that are going to be more costly for the end investor. And we think that the spot products are going to have a multiple of demand for them, but it's really Bitcoin which has the kind of unique regulatory status still, and that's the one where we can be pretty confident that the combined demand from institutional and retail investors looking for a spot product will be in the double-digit billions over the course of 1 year, I would guess.
I want to get into some of the macro pressures because you've mentioned that a couple times, but I want to, before I jump to that, kind of talk a little bit about the Grayscale situation. Obviously, their deadline coming up this Friday. You know, the likelihood of us getting a delay there is most prominent, I would think. But what's your opinion on the situation right now with Grayscale?
We think that Grayscale has a good case. We've said for a long time that the SEC's failure to explain more clearly their thinking behind the differences between spot and futures-based ETFs, was a case of kind of arbitrary and capricious treatment under the law. So, without commenting too directly on a competitor, support that lawsuit. Think they have a good case. Think that the SEC is increasingly being confronted with its own lack of logic. The courts are starting to realize that. We're seeing a winning streak or a losing streak by the SEC. I'm on paper saying that Gary Gensler is going to be gone before the end of the year. The clock is kind of ticking on that, but there's a lot of examples of SEC chairs that preferred to step down after embarrassing losses rather than create a further distraction for their president. So that's my personal guess, is that this guy's not long for the seat. But in the meantime, he's created a very challenging legal environment, and it's good to see Grayscale having some early success in court.
Yeah, we'll be watching the Coinbase situation, because I think that would be the next shoot to fall, I think, in the sense of at least another loss for the SEC, or at least a position that isn't defensible, by that office. I want to go over to a clip here. This is from Eric Balchunas from Bloomberg, and play this for you and kind of get your opinion on this. Let's jump to that clip real quick.
When the spot comes out, you're going to find a migration over to spot. So these futures ETFs will go extinct. James and I are still holding the line at 75% odds of approval this year of a spot Bitcoin ETF.
This year, 2024 calendar year.
No,
2023 calendar year, sorry.
2023. Ether, in my opinion, I would expect that to be a month or two after Bitcoin.
All right, so a couple things Eric hit on there. He's been on our show before. One, of course, that's a pretty aggressive stance, the 75%, and to happen this year. Kind of curious, do you agree with that, disagree? What's kind of your theory there?
That sounds a little high from our perspective. There's a number of different divisions within the SEC that need to weigh in on these filings, and kind of 75% by the end of the year just sounds a little bit high. We're a little bit more tilted towards a Q1, but we're ready to go if Eric's right, and I hope he is. The faster that the investment community has access to these products, the better from our perspective. It's safe. These are safe and liquid and cost-effective ways to get your hands on physical Bitcoin. So hope he's right.
I know that you guys did a full report. This is one that's been, months in the making of kind of the future of where ETH, I'll flip back to ETH real quick. When a spot does occur for Ethereum, whether that is, Q1 of next year or right after a Bitcoin spot, all those kind of things that play into it. First of all, what do you think is going to be the inflow for a spot ETF on Ethereum? Do you think that will be a landslide inflow? Do you think that's going to take some time to really develop?
I think these are going to be billion-dollar products in the aggregate in the first 3 to 6 months.
Okay.
But I really do think that institutional investors have a lot more clarity around Bitcoin's regulatory certainty, even if an ETH spot ETF is blessed by the regulator. It's my personal view that the demand for the Bitcoin ETFs will be multiples of what it is for Ethereum. Now, the macro environment could change that, right? What we've tended to see during these crypto bear markets is that Bitcoin dominance rises, that Ethereum is the higher beta asset, and then once the bull market kicks off, investors tend to take their Bitcoin profits and try to find something even riskier to bet on, and that's when Ethereum and some of these altcoins start to outperform. So, given what we're seeing in the bond market, in the political arena in the U.S., Just want to see a little bit more time pass before getting conviction to increase weights dramatically to this asset class, and I think that's kind of what our clients are telling us as well.
Yeah.
So we're looking for Bitcoin to outperform here as we head into the halving next spring.
Well, the good thing I think for most people watching our show is that you're in the right game. I mean, there are some great opportunities here that are starting to brew within this asset class, and whether you're looking at Bitcoin or Ethereum, what's interesting to me is the amount of adoption. I won't say adoption, but just the embrace. I guess the embrace that we've seen from the TradFi markets, including VanEck, but other companies like Fidelity out there who have also gone pretty heavy into ETH. When you look at that, and then you think about the education factor that kind of takes place within the crypto market, the traditional crypto markets, versus what we might see there. I was following your Twitter account, and I saw your market vector example that you've got here, these different indices that are now alive on the terminal. And do you feel like when you get into things like this, in terms of tools, especially around Ethereum, that this is going to really kind of maybe level the playing field for an investor that's coming into this market for the first time and say, all right, ETH, Bitcoin, I think I'm going to go this direction. What do you think is going to happen with things like what you've got here on your tools, et cetera?
Yeah, thanks for highlighting that. Like one of the things that I'm struck by, and I'm a former equity PM, worked at some large buy-side equity shops that have so many tools at our fingertips from the sell side in terms of data, benchmarks, access to management teams, research. And when you get into digital assets, you realize a hugely fragmented landscape and very little in the way of trusted intermediaries. Not too much of the information is served up on a platter. So it's really a challenge to find the right data sets that are going to help, protect from losses and add to gains. So VanEck owns an indexing company called Market Vectors, which is regulated in the EU. We self-index more than half of our ETFs. So Market Vectors has a digital assets business line. They've got several dozen indices that help investors benchmark their own digital asset investments. And VanEck's not the only client. Market Vector has dozens of clients. So one of my early projects was to work with them to develop a taxonomy of the space and create a number of kind of sector indices that would help portfolio managers segment the digital assets landscape in order to figure out just who's winning and who's losing. So we've got indices like smart contract leaders, DeFi leaders, infrastructure leaders, metaverse leaders. These are subcategories of the digital asset ecosystem that are tracked and updated by Market Vectors via these benchmarks that I can look at on my Bloomberg. And one of the newest indices that they recently released is the one that you just showed, which is the Ethereum staking rate, which is an annualized interest rate that you. So this is the ETH total return index, which includes staking, and then the ETH price, which doesn't include staking. So that's one of our new indices. And then the other was that MVETH SRR Market Vectors ETH staking rate, which actually just shows an interest rate, right? An annualized interest rate that stakers earn on their ETH. And we thought that would be valuable for macro PMs, especially in the current environment when you see the T-bill yield keep going up, the ETH staking yield keep going down. That's a tough environment for kind of macro investors to make an allocation to ETH in. Now, if it starts to get too extreme, they'll use it as a contrarian indicator because you want to buy when there's blood in the streets and, take the asset away from weak hands into strong hands. But at the moment, tough environment for ETH stakers versus T-bill buyers.
So, Mathew, would this, based on the report that you guys did earlier this year, you had a full ETH revenue price target layout here. I'm just going to reference that PDF. But one of the things that I was interested in was the bear for 2030. Would you revise that number right there on the bear case? I don't know if anybody can see that. I'm going to zoom in on that a little bit, but just to give you guys an idea. That was the bear case at 343. The bull case for 2030 is around 50K. So any revisions to that, or do you feel pretty strong on that one?
Yeah, we actually just refreshed this internally to make sure it's still valid. Our base case is $11,000 per coin for Ethereum, and that's based on a top line which grows from about $2.5 billion annualized today to $50 billion over the next 6-7 years. And then we really do a proper and classic DCF there. We're deducting a tax rate. We are applying a cost of capital to Ethereum based on its beta versus the stock market. So that $50 billion in revenue estimate, I mean, we're going to need to see some decentralized apps go viral and get mass adoption in order to achieve that price target. And if no one is making on-chain transactions and Ethereum becomes a permissioned network, then that bear case may be in play. We look at all these assets as call options on an alternative financial future in which decentralized databases form a material portion of the world's financial transactions. We think that goes kind of part and parcel with some de-dollarization and with a strong desire by some countries that are currently on the fringes of the global financial system to chart their own path via self-custody and to transact on permissionless and censorship-resistant networks. There's always a possibility that doesn't happen, or that's delayed, or that the U.S. pushes hard to prevent that from happening, and crypto could go through the type of bear market that gold did for many decades when gold was functionally illegal. We don't think that's going to happen, and that's why we have those funds. But that is a possibility, and that's why we have the bear case in our numbers.
Yeah. Okay. So I want to wrap up. I agree with that. I'm maybe looking at it. I just look at it from the sense of we put so much research on, the ecosystem of ETH. We don't see that kind of bear case appealing. But I think the way you put it, there are some windows there that could happen if we don't see a mass adoption. Whether it's a viral application or a platform that starts to really utilize it, could be the case. With the things that we're seeing though in the marketplace, there's just so much brewing right now in terms of opportunity. So to your point, or to that point, I want to hit on the partnership you guys did with L1 Advisors, which this is another thing with VanEck that you guys are of course implementing right now. And that to me also, even though it's it's a small pre-seed, I get that, but these are the kind of startups that really end up changing the game down the road. What's your feeling of where VanEck is going in terms of a lot of this new entry into the market around startups, new TradFi, a lot of the fintech that's starting to hit the market? Do you see a lot of that starting to lean into crypto right now?
Yeah, so the impetus for getting into crypto in the first hand was that our CEO Jan VanEck has significant gold and gold mining positions, and we're worried that Bitcoin could be a competitor to gold over the long run, and so we wanted to get smarter in this space, and that involves not just trying to bring ETFs to market, but also investing in venture in the space. We own a stake in an early stage venture manager, and we just want to make sure that we are not hit by the innovator's dilemma here and end up ignoring opportunities. So L1 is a software as a service platform that helps registered investment advisors bring their clients' crypto holdings under their own advisement by giving them a look through into self-custody wallets and the ability to recommend transactions to their advisors, who would then pass that recommendation on to their end clients. So VanEck could be a manufacturer of funds that a platform like that would be a distributor would use to provide investment options to their end clients. And as you noted, it's a small, almost a pre-seed type investment, but we want to scatter some bets in this space. That's not the type of a business that's going to go necessarily viral, but we've got some other kind of early stage investments in more consumer applications or decentralized applications that could go viral. I'll briefly highlight one of them because we put it in paper. In one of our crypto hedge fund, we took a private investment in a project called Hivemapper. which makes a dash cam that it's open source components, but you can mount this dash cam in your car. And as you're driving around, it will take images of where you've driven and upload them into the cloud. And you'll be paid these honey tokens in return for doing that work. And what you're doing is really crowdsourcing a competitor to Google Street View. And once that competitor is formed enough, there will be fleet managers like UPS or smaller UPSs who would look to license that data, that Hivemapper data, theoretically at a much cheaper cost than what it costs to do so from Google Street View. You can spend $80,000 a month on Google Street View and never talk to a salesperson. So that's a very consolidated, large market that we think is ripe for disruption. And we did take a position in those honey tokens in a private transaction that we disclosed. And those are the type of kind of consumer-facing applications that have the potential to disrupt these super juicy Web 2 margins, and that's one, the type of use cases that we're most excited about in this space.
Yeah, we've actually had the Hivemapper team on, so we're really aware of the project. Obviously, a Solana-based project. And and I guess that kind of leads me into my next question, because you're right, there's a lot of innovation happening. Now you're talking about one particular one that, of course, is on Solana. What's your theory on whether or not we'll see like a Solana-based ETF, an Avalanche-based ETF in the future down the road? Do you feel like that's in the cards right now?
I feel like we're getting very close to the point where it would be difficult for the SEC to say no. We'll see. We got to get these ETH ones out, but we'll see. Part of it will depend on how the Coinbase suit goes as well.
Yes.
But those could be 2024 stories. We already have a number of alt L1 ETPs trading in Europe, so there is precedent for this, and I think that you'll start to see ETFs that can hold these ETFs, and you'll get kind of multi-token products perhaps as soon as next year.
Wow, that's crazy. On that last thing, I want to hit you on two topics right now. Bloomberg Crypto come in. JP Morgan has gone live with its first collateral settlement for clients. This is going to be pretty interesting using Onyx. With this happening, and you look at tokenization of assets now becoming mainstream, we're really talking about mainstream institutional finance here right now. What do you think this is going to do to the markets as they are right now? Do you feel like it's just going to be everybody piling in on tokenizing assets across the plane, or do you feel like this is going to be a little bit more of a growth period of time and take some time to get this done?
All right, I'm going to give my contrarian hot take here, which is that these tokenized real-world assets are going nowhere for the meantime. They're just adding additional cost and complexity, the yields that you can get on an on-chain T-bill are less than what you can get in an actual T-bill, but you end up with smart contract risk, fragmented liquidity, higher fees. It's just not a very interesting product right now, neither for the issuer nor for the buyer. Most of them require, some form of KYC, and the KYC is geographically dependent. So from my personal perspective, Bitcoin has to 10x in order for these to become interesting, right? Once Bitcoin makes all-time highs and beyond, then you'll get some demand from folks who have profits, Bitcoin-based profits that they want to deploy into safer vehicles. But until then, it's basically like folks inside the industry playing around with proofs of concept, but not expecting much in the way of like large liquidity until we get a rally in the decentralized protocols. That is the point here. These are decentralized databases. JP Morgan Onyx, I really don't care.
Yeah, well, I think your point is right in the sense that the market itself has got to show a real proof case in play, much like what you're mentioning with Bitcoin's position to move to an all-time high. But at the same time, you look at the opportunity here. Obviously, they're not playing with these. I mean, it's like, I look at it kind of like what really kind of spawned out of 2000 when we saw the .bomb occur, and we saw a lot of companies starting to test some new innovation that many people thought would not necessarily be the future of e-commerce, but ended up actually being the future of e-commerce. So I look at it that way in the sense that, one, these are some serious players in here. They are spending some money at it. Obviously, to your point, yes, the market needs to get to, hey, it needs to put its big pants on, and actually come to the table in terms of a serious asset class before a lot of these things, I think, roll out to you. Last question to you, Speaker of the House. Do you think this slows things down for regulation? What's your position there when we get into the political front?
Yes, I think the chances of legislation, passing before the election are extremely low, no matter who takes that speaker role. I mean, I guess we'd all be happy to see Tom Emmer get it because he's really the pro-freedom, pro-Bitcoin, pro-crypto majority whip, but he seems a little bit less likely here. So I think we're going to have to wait until the election really to find out. What type of legislation is possible.
Interesting.
Now, I should say though that this Israel-Hamas stuff, it throws a curveball because we've seen lots of cases like after 9/11 and the Patriot Act where there's a lot of ancillary stuff that can go into these national security bills, and some of the provisions that have been mooted into recent national security legislation includes restrictions on communications protocols and giving the Commerce Department the ability to designate certain communications protocols as detrimental to national security. So I don't think the Israel war is a tremendous thing for Bitcoin at the moment, right? One of the things that everyone was surprised about is why crypto didn't work when inflation heated up, and the reason was that people missed the second order effect, which is that governments use inflation as an excuse to micromanage the economy more. And in the case of these, most of G7, that micromanaging included kind of anti-crypto, proposals and policies.
Mathew, the PPI numbers came out a little differently than expected. And do you feel like maybe this is the first of many of these kinds of reports to come, especially from a macro position, that maybe we are at the actual, threshold of something really breaking here to where the Fed does have to make a serious decision? What are your thoughts there?
I have some dry powder prepared for when I've got higher conviction in that view. I think we're getting there, and look forward to deploying some capital into a tougher tape.
Yeah, interesting. All right, well, that's good. Good to know. All right, listen, Mathew, it's first of all, great. Thanks so much for having you and VanEck on today. It's been great chatting with you. We'd love to have you back on the show sometime. So thanks for stopping in. We appreciate it.
My pleasure. Thank you.
You bet. All right, so you guys are maybe listening over on the podcast side of things. Make sure to jump over here to the YouTube channel. You'll get a chance to, see a lot of this in, full living color. You'll get a chance to see charts when we do breakdowns, when we do, deeper dives on projects. A lot of times we use examples that sometimes don't translate well on the podcast side. So jump over here to the YouTube channel. Just search Paul Barron Network. You'll find us. Give us a like or two. You'll like, I think, the content if you're really starting to learn a little bit more about crypto and blockchain in general. Hopefully it matches up with what you're looking for. If you guys want to reach me, it's out there on X at Paul Barron. We'll catch you next time right here on TechPath.